Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. In my video yesterday, I reported on the very fresh geopolitical involvement that spooked the markets. At that moment, Bitcoin had just reached the yellow horizontal at 101.5K. I remained cautiously bullish, expecting a quick reversal, even though the 3-day liquidation heat map was already flashing potential downside levels all the way to 100K. That was mostly due to overexposed 50x long positions stacked right beneath us. What followed was a textbook fear-driven flush. The short-lived reversal around 102.5K faded quickly as uncertainty intensified throughout the day. Bitcoin crashed through multiple support levels. First the yellow horizontal at 101.5K, then the psychological and technical barrier at 100K. I'll be honest with you, during the dip below 100K, I added margin to my existing long positions. That move lowered my liquidation price, but I honestly didn't think we would revisit sub 100K levels again for the remainder of this year. It was a heavy moment on the chart and in sentiment. The good news is that Bitcoin has now reclaimed the all-important 100K level. It has also climbed back above the blue horizontal at 100.8K and is currently moving toward the yellow horizontal at 101.5K. So far the rebound looks healthy, but I am not rushing into a new position just yet. I was close to opening another long at exactly 100K, but I decided against it. My risk appetite is fully satisfied after today's scare. That kind of volatility reminds you why position sizing and margin control matter. Zooming into the 1-hour time frame, the wave trend indicator is showing a bullish divergence, and money flow is trending higher. These are early signs that strength is returning. The key question now is, will ETF buyers scoop up the cheap sats next week, or will they behave like retail and dump into weakness? History has shown that when retail panic sells, institutions are often on the other side, patiently accumulating. That behavior could very well repeat again soon. On the 3-day liquidation heat map, the good news is that there are no fresh long leverage clusters below us. That means there is little reason for market makers to push the price lower through forced liquidation games. However, above us at 104K, a new cluster of over-leveraged shorts has appeared. These positions are running at around 25x leverage. In my view, they are too late and too aggressive. If today's panic flush truly marked the bottom, and if ETFs along with Michael Saylor keep accumulating, then that short wall at 104K could be eaten very soon. I will continue updating you daily. Join the free Discord for real-time trading thoughts. Click the like button if you got value from this video. Subscribe and turn on the notification bell to stay updated. And see you in the next one.